Hello, I am Frederick Bell, the CEO and Director of Elemental Royalties Corp. We're a TSXV listed company with a portfolio of predominantly producing precious metals royalties, which is what sets us apart in the royalty space.
Good to see you, Fred. Been a while. You've been a bit busy dealing with a few things in the market. I see. You have an offer on the table, a bid on the table. What do you make of it?
Look, we have responded formally in a director circular that was put out, and in that we laid out 13 really clear reasons why we did not believe that this unsolicited hostile bid that was done, in our view, opportunistically just before Christmas. This bid does not offer compelling value for Elemental shareholders. It's not compelling on a relative or an absolute basis. And I think that has been really clearly communicated by the fact that an absolute majority of Elemental shareholders have told us that they do not intend to accept this bid. So I think it's often rare that a company can talk to an absolute majority of its shareholders in a short space of time and actually get that feedback. And we received it, and some of it unsolicited, from shareholders saying that this was not an attractive proposition for them.
Okay, so you, on a fundamental or relative basis, so what does that mean? So how are you valuing what you've got compared to the offer that came in?
Well, one of the key factors for us, and we have built a portfolio that is really the foundations are very solid, producing cash flowing royalties, which give us diversified revenue from the outset and the platform to build a royalty company from. And this offer is effectively presenting Elemental shareholders with the ability to contribute over 60% of the revenue to the pro forma enlarged group, but only receive 12% of the equity in the pro forma enlarged group. And so clearly, Elemental shareholders are being diluted from their exposure to the assets that they have bought into and the strategy that we have built over time. And I think that one of the things we have consistently said, and we've probably said it on Crux to you a number of times over the past year, is our view that it is far harder to go out and acquire good quality producing assets than it is to acquire early stage royalties that may or may not ever come into production. And so for us to basically, I think, seed our good royalties on producing assets in return for a larger stake of exploration, very early stage exploration royalties in many cases. Again, it's not compelling for the special committee that we have set up. It wasn't compelling for the board. It wasn't compelling for an absolute majority of our shareholders.
Okay, here's a question for you. Okay, sure, Gold Royalty don't have much revenue at the moment or in the next couple of years, but when you want to be part of that kind of promotional machine that they've got, I mean, they've built a $600 million company in no short order with, a portfolio which, as you say, is probably a little bit long time based in terms of where the potential comes from. Can you benefit from that? Can you utilize that? Isn't that a way of getting a increased multiple on the way that people view your assets in your portfolio?
Well, I think the real risk we see here is an all equity offer on something that is trading on, by metrics you look at it, very, very high relative and absolute valuations. And so for Elemental shareholders, going from something that is trading at 9 times 2022 revenue into something on their side, I think that is probably trading at 90 times 2022 revenues. That is a substantial risk for Elemental shareholders to take on, because if that reverts to the royalty, the average,
which is what is it across the industry?
Probably 15 to 20 times for some of the big royalty companies. That is an awful lot of downside there that Elemental shareholders are being asked to take in return for contributing the majority of the revenue in the pro forma group. And I think that is one of the 13 reasons in the director circular why we have laid out that this bid is is wholly unacceptable. It is not compelling, and it does not garner the traction or the support of an absolute majority of Elemental shareholders. And one thing I might even add to that is, if you look at Elemental's track record to date, we have built this company from our first fundraise in 2017 at 27 cents. It's in our presentation. You can see our share price graph since we started, and we have added value to shareholders consistently since we started this company. If you look at our revenue, we have been able to almost double revenue year on year, and we have said previously that 2022 will be forecast to be a record year for revenue for Elemental, and we should have our official guidance out on that in February. So from our perspective, we're growing Elemental at a pretty fast pace on revenue, which is what really matters. And the appeal of going into a larger group that we are substantially the majority of the revenue with a very small shareholding in that. That is not something that is attractive to Elemental shareholders.
So, look, and I want to talk about your portfolio in a minute, but in a minute, and we've had some conversations in the past about how you value deals and your portfolio more broadly and how you measure that. So we'll get into that in a second here. But so I just want to stick with this thing, because we've seen in the industry lots of new entrants coming in. It's a sort of exciting space where royalty and streaming companies being created. M&A was expected. We've talked about that last year, beginning of the year. I think that was recognized that it needs to happen. So a new entrant like Gold Royalty into the space, and they've been in conversations with lots of companies about rolling up some of these smaller players. I just want to come back to this point around the industry average multiples versus where they're at versus where you're at. You're kind of, you're 9 times. You think it should be somewhere like 15 times the industry average, and these guys are about 90. That's worrying. That's worrying for me. In the sense, are we? You probably can't say it, but are you looking at their portfolio and gaining no confidence about their ability to drive revenue in the near term? Is that a concern for you? Or do you put no store in their ability to promote into the US because they've got the US listing? I mean, what are the variables that you've thought about when you're going, well, is this a good thing or not? Is a case of, well, a bid would be welcome. We just need we need to push them to up their bid here. Or fundamentally, do you think it's the wrong vehicle for your shareholders to, be moved over to be part of? What's your thinking?
I think that it is it is not an attractive, and we have to talk about the offer that is on the table that has been made public formally to our shareholders. And that offer that is on the table from the bidder, that is not an attractive offer, and that comes down to both the company and the valuation. And I think we have
which valuation though? Which value? This one I want to get to. The valuation that they've given you, we're saying here's 12% of our equity post deal, or your view of their valuation as it currently stands with a multiple of somewhere near 90. Which valuation?
Well, I think we can talk to Elemental's valuation that they have offered. And to be really clear, they announced this as a 37% premium. Since the offer, the majority of the time it has actually, because it is an all equity offer and their share price is lower, it has actually been an under 20% premium for the majority of the time since. So that is wholly unacceptable and not attractive. And I think clearly shareholders can make their own minds up on other royalty companies' valuations. But suffice to say, NAV valuations and revenue valuations are two different metrics commonly used. And revenue valuations are very straightforward, especially when you have the track record to demonstrate them. And I think NAV valuations can often be very opaque and based on one person's view of what it is, of what these assets potentially can be worth in the future. And so for Elemental, we have said you can model the company pretty much in an afternoon. You can look at our core royalties; they are public companies. public mine plans, public guidance, and you can pretty much work back from there. I think when you have a large portfolio of early stage royalties, it's incredibly hard to know how many of those will actually ever eventuate turn into a real mine and actually ever pay a royalty. And just look at the industry as a whole. We know for a fact that 1% of prospects, it will be far less than that, ever turn into a mine. So you may have 150 exploration projects, but it may be in 10 years' time, none of those have ever paid a revenue and ever turned into anything. And that for us is a key risk as well.
Okay, so their multiple is. I'm gonna stick with this because I really need to understand. And we interviewed Dave Garofalo, I think in November. Kind of got into it. One of my questions was around their valuation in relation to current revenue and near-term revenue, that being revenue in the next couple of years. They definitely have a machine working there, but something which is 6 times the industry average as a multiple. I think that's. It's either you say I can use that and work with that, or I don't believe it, therefore I don't want to be party to that, or I tell you what, if the price is right, then it's something that I could probably wrap my head around. You seem nervous about not just the offer that they're giving you guys, but in terms of the valuation that the market is attributing to them.
I think you have to look at this as when you are being offered all equity, you have to look at this as an elemental shareholder. That's our primary role here. And when we look at it as an elemental shareholder, the valuation metrics the pro forma group would be trading on are clearly, particularly on a revenue basis, they're exceptionally high compared to the industry average. And so we look at this and we think, are we going to get a double bump in terms of valuation, or actually is there a downside risk to this? And I think that is something that all our shareholders will be able to come to a view on themselves. But clearly, and I think again, if you go through our circular, you can see clearly we believe that the valuation is on an absolute basis unattractive, but on a relative basis, it's also not compelling.
Okay, because I guess the other company that people can look to, shareholders or otherwise investors can look to, is Metalla, who are off 50% from their highs at the beginning of 2021. We're sort of $16 now, down at around $8. The shine has come off there. I think he possibly suffer from the same issues with regards to portfolio strength, so that some good ones, but not enough good ones. Okay, so what are the other kind of defense points that you're making to your shareholder? You're telling me they've voted unanimously not to, but are they looking to you to go back in and get a better offer, or are they looking to you to look elsewhere for an offer, or are they looking to you to get on with the business of building a royalty company? Well,
I think we absolutely owe it to our shareholders to get on with the business of building a royalty company. And we said that 2022 was going to be a record year, and we expect to have formal guidance in February. But clearly, with 2 major royalties coming on stream for us in a material way this year, that is going to be a driver for us. And we've talked in the past to, as we get increasing scale, we get greater liquidity. You have the opportunity to get a better credit facility, more investors. And so all of those things, which we have publicly said in the past, are sort of 2022 was a big year for us. And that is why we think an unsolicited hostile bid announced on the 20th of December is really an opportunistic attempt to, I think, get a good deal for Gold Royalty, the bidder shareholders. And it's really not a good deal for elemental shareholders. And to talk to a few things there, we have on, I think, sort of resource updates, some of our key royalties, counterparty operators, they have announced probably in the first half of this year on a number of those. And again, those are material value drivers for us alongside other things. And that is clearly, none of that is reflected in this bid. And so yes, we will always talk to other royalty companies, and in the bid circular, you can see that we actually talk to the current bidder prior to them launching an unsolicited bid, and I think that is it's a sensible path for us to do, to continue to talk to royalty companies across the space, but we're absolutely keeping the door open to continuing to add value to Elemental shareholders, as is our responsibility.
Okay, and are you in other conversations at the moment? Like any meaningful conversations? I know there's conversations happen all the time, people digging around, getting information, but are you in any meaningful conversations about M&A?
I would comment that generally, in the royalty space, I think that this hostile bid has probably focused minds on a topic that has been discussed somewhat in the past of consolidation, and I think for Elemental, I can't comment specifically on companies or conversations, but we have repeatedly said in the past that we are building a portfolio and a company with really high quality cornerstone assets that will always appeal, and always be attractive to other royalty companies and peers. And that's, at the end of the day, receiving a hostile bid is, in some ways, speaks to the attractiveness of our assets and our portfolio.
They didn't frame it like that. They didn't talk about a hostile bid.
Look, I think that again, it's I think the way this has happened, in a way that we think is opportunistic in timing, and it doesn't offer Elemental shareholders full and fair value. I think it is hard to see that in another way, and I think from our view, we've always been open to talking to other royalty companies, and I think that this is not an offer that is going to be a good deal for Elemental shareholders. Again, our shareholders, big and small, have been in contact with us, representing an absolute majority of Elemental shareholders, and they have told us that this is not an attractive offer.
Okay, like it's always a tough one, because I always say to CEOs, oh, you're looking to sell, etc. Oh, we'll take, we have to consider all good offers that are put on the table, and invariably the CEOs want to go on and be given the opportunity to build a successful and big and meaningful and profitable company. Sometimes that's taken out of the hands. It's nice to sort of see the shareholders backing what you've done to date and what you're hoping to do in the future. So that's all good. But what about? Well, you say it's a topical conversation. It is. Have you ever thought of moving to be a hunter rather than the prey?
We're definitely. I don't actually see it necessarily in that perspective. I think any transaction that we would look to do, it would have to be we would want it to be a positive transaction for both parties. And I think when you look across the royalty space, there are companies, portfolios trading at attractive valuations, where I think there's always opportunities for that combination to be meaningfully value accretive. And I think that whether or not we are in your words, the hunter or the hunted, that doesn't actually matter to us. And that's really important, because Elemental directors and management own about 15% of the company's equity. So we are shareholders far more than sort of employees, and I think that has been crucial for us as we've gone. And you've seen over the last year, prior to this hostile bid from Gold Royalty, directors have been buying shares on the market when we can, in between close periods, on a consistent basis, really since we listed, and participated in all the fundraisers Elemental has ever done. So it's certainly a case that we think as shareholders first. And I think that is why a clear majority of our shareholders have reached the same conclusion that we have in regards to this approach.
Good, we did too. I think that as you laid out quite nicely in your director's circular, which we'll put a link to below this video. Please go and look at it. You've laid out some pretty good reasons. I think our takeaway from the Gold Royalty interview in November was that they are overvalued. Different business model, and when the shine comes off, it comes off quick. So let's talk about the future. Okay, you've kind of remind us about Carla Winda and obviously Mercedes Gold, coming delivering full year worth of revenue this year. Let's talk about what else is happening in 2022 revenue wise, and also any kind of building up of the portfolio and what you're hoping to do. So, when you give us the update on those two first.
Well, I would also just say, Matt, it's nice to talk about Elemental by itself for a change. There's been a lot of discussion recently around other companies and bids and sort of things of that nature. What we really want to do is to talk about Elemental and
not how it's backfilling someone else's valuation, right? I get it. Let's go. Come on.
Talk about Elemental and. One thing that we did say, and we only started saying it in November last year, but we started saying that with Carla Winda de-risked and in commercial production, we have been in the stage that we have really sought to be in since we started this company, which is $10 million of diversified revenue, being able to lower our cost of capital, a really visible pipeline of growth from the portfolio, and crucially, I think putting ourselves in the position to go out and start building the pipeline with development stage assets and earlier stage assets, because it's great to have this portfolio of producing royalties. It's a holy grail in the royalty space. Good quality producing assets. Everyone always wants them. So to start with a portfolio that is 80% that is I think the dream for anyone putting a royalty company together. And now we have the platform and to go out and start to gradually build that up. And we're still looking and planning to add in producing assets as we go, but we feel comfortable enough that we're in a position to start adding to our development pipeline as well. And that's really exciting because you can start to layer on the exploration and the pipeline and the growth. And for us, we have a really good growth pipeline in terms of revenue this year, but we're also just starting to see exploration at some of our existing assets. And the reason that is so important is that our two biggest royalties are Wang Yon and Carla Winda. Wang Yon came on at the end of 2019, and Carla Winda came on last year in 2021. So these are two brand new, large scale, long life assets. And in Wang Yon's case, it's now owned by a top 10 gold miner in Endeavour, and they had their first exploration budget for Wang Yon last year. And they spent $12.5 million US on Wang Yon. I think they've announced $9 million US this year. That is 1,000 square kilometer land package. So that is as big as 4 or 5, other mines might be with all their entire land package. And this is really the first time that Endeavour are being able to get to grips with it. So when you have a top 10 gold miner globally putting their second biggest exploration budget into our royalty there that covers an entire district, 1,000 square kilometers, there is years and years of exploration to come. And Endeavour have actually announced an exploration target by the end of 2025 of 1.5 to 2 million ounces in measured and indicated resources at Wang Yon. To give you an idea, when that mine was built, it had a bit over 2 million ounces. So they're effectively saying that in 3 years' time, they will have doubled the size of that. So it will be a bigger mine having paid us for the next 3 years than it was when we bought it, and then it is today. And you might always take that with a pinch of salt if it's a small junior company, but a top 10 gold miner saying that with the track record that they have, clearly that asset has a long way to go in terms of growth and value. And I think that probably is also part of the driver someone might make an unsolicited bid for us before any of that value and any of that is reflected in Elemental. And our second asset, Carla Winder, they've just brought it on stream. And very much like Wang Yon, when you bring the mine on stream, your immediate focus is getting it up and running, commercial, steady state production. And once you hit that, you then start to gradually build out exploration, which is exactly the playbook they have done. It's a very successful management team there, the ex-Regis management team at Capricorn, and they trade at a very good premium because of their track record and what they have managed to do historically. And for us, really again, right now, to have that asset valued before they've had the chance to really do any near mine exploration, before they've had the chance to optimize, before they've had the chance to potentially increase the throughput at the mine, which they have done with all the assets they built at Regis. I think all of those are clear and compelling reasons why a bid today is opportunistic, undervalues Elemental. And I could talk to some of our other assets in the portfolio, but
Well, do that, because like 10 million revenue, you've got these two big projects with companies with big balance sheets, and allocating that to for further discovery, fantastic, right? Just remind me, I know we talked about it last time out, but I just want to remind people about the flow of development projects that will come will contribute towards your revenue over the next 2 years. I think of in those sorts of terms, every 2 years, what new revenue is coming on board? Because you've kind of previously given guidance as to what you think the revenue projections could be, all things being equal. So can you get into some of the other projects?
Yeah, in terms of new assets coming on, well, Mercedes is the one that's already producing, and the royalty starts to pay us from July this year. So that comes on stream. And then in terms of development pipeline specifically, I'll probably highlight a couple of assets, but Laverton, which is Focus Minerals in Australia. I think that the royalty we have there covers both oxide near surface, and that is within distance, within easy tracking distance of the existing mines that both Anglo Gold Ashanti have and Dacian have, and those are existing operating assets, and part of what the royalty covers there is high grade oxide. So they have the option there to either work with existing operating mines who would be hungry for that feed, or to develop it as a standalone. The much bigger prize there for us, what attracted us, was the Lancefield underground mine, and that was in the 1990s one of the top 10 underground gold mines in Australia. And we have a 2% royalty over it. It was producing, I think, 100,000 ounces a year in the 1990s, and it hasn't had any work done on it going back, I think, almost 20 years now. So to have that in Western Australia, again, within sort of easy distance of two existing operating assets, that for us has a lot of value in our pipeline. And we don't talk about it. We haven't talked about it that much, because the focus has been on our key assets coming on stream at the end of last year and this year. So they almost get overlooked. But another asset that's had quite a lot of work on it in the last year has been our Panton royalty. And it's actually a new company there that's taken that on, and dual listed in Australia and on AIM in London, and have been doing an aggressive drill program there to update the resource and expand it. So I think there's a number of assets there that we see really active exploration on, and where there's either the potential for them to be additional short-term revenue, or for it to be a larger standalone project. And I think that's an area where we might look to continue to add to the portfolio as we grow.
Okay, so and sorry to take you slightly back to unsolicited bids. Has what you've done over the last year in terms of the portfolio building and the recent unsolicited bid shaped the way that you think you will build the portfolio going forward? And I say that in the context of, you're going to be looking at, gold equivalent royalty link, resource and reserve numbers as we're measuring the portfolio. But we also have seen last year with a lot of new entrants coming in, that a lot of value being given to royalty companies picking up any old royalties which perhaps have very little chance of actually being monetized because they'll never get into production. So has the balance of the portfolio that you're trying to build, or the outlook for the portfolio that you're trying to build, changed as a result of the last year and recent events?
I would say it hasn't changed as a result of recent events. I think that as part of our overall plan to get that foundation of diversified revenue, clearly our biggest asset, the key one there was Karlawinda, which had first full quarter of commercial production in Q4 last year. So that has been the catalyst for us to start saying, okay, we're now comfortable enough and confident enough in our position that we can go out and start to add to our pipeline, not just of producing assets, but also the development ones that will be coming on in years 2, 3, 4, and 5. And I think that's where you can get into a really exciting position, where you have multiple assets being developed by multiple operators in parallel with your existing producing royalties continuing to operate and continuing to do their own exploration. And when you look across royalties and royalty companies in the space, I think it's often been the case that the initial asset, the initial project, sometimes has taken longer to get into production than originally planned. But it is for us, now that we have a really solid base of producing royalties, it is easier for a company like us to carry a 6-month delay if we buy a royalty, a 12-month delay. That's riskier and harder for a smaller company to do, or for a new company to do. So I think that's one of the key factors in our overall strategy. Focus first on the hard part. Focus on producing royalties. We all know we can go out there and buy exploration and early stage royalties. There are an awful lot of them. But if we put ourselves in the position that we are today, we're trading at sort of 9 times forward revenue. I think that gives us the best possible platform to grow the company in a way that adds value for shareholders, not just growing for the sake of growing, which is a really key distinction. There is a reason that I think our shareholders, our management team, still own 15% of the company, and some of our key shareholders have been there for a while. And it's because we're not going out and diluting ourselves 90% with every deal we do.
I mean, when you look back to the South 32 deal, I think at the time the market was, I think there's a lot of comments going around, well, that was an expensive deal. How do you view it now? Do you feel better about that deal?
Yeah, it's I always use the analogy, and it's a year and a half ahead, but I always use the analogy of Wang Yon here, because I remember when we bought Wang Yon, we bought it at the time for 12.5 million, and I think at the time we felt that was a pretty full price internally, and actually when you look back on it today, it is worth significantly more than that. According to analyst consensus, according to their own mine plan, they've openly talked about the fact they're planning to more than double, or planning to double the resource over the next few years at no cost to Elemental. So clearly, when you look at that, as they build the mine and they've managed to not just run it at nameplate, but really run it effectively higher than that and add exploration, suddenly that royalty looks like a very good buy in retrospect. And I think the South 32 portfolio, one of the key, the key royalty there was Capricorn's Karlawinda. And I think that if you look at what they have, it's still very early days, but if you look at what they've already achieved, they declared commercial production after 1 quarter. They brought this mine on time and on budget, while Western Australia was almost sort of in lockdown, can't come in and can't come out. And I recall one of the comments from an Australian analyst broker, which was it was one of the smoothest construction mine builds and ramp ups that they've seen in recent times in Western Australia. And a large part of the attraction that we saw in this asset is the exploration potential, and it is the management's track record of execution. And some of these things are less tangible than others. It's very easy to put some A and B down on paper, but C, D, and E, which actually are crucial ingredients, you can't always really pin them down and put a value on them. But as we've seen at Wang Yon, when you put a really good quality asset with a lot of exploration potential together, with good management team, with access to capital, then as a royalty holder, you get the best result. And I think that we liked that South 32 acquisition clearly when we did it. And I think that as time has gone on, and they have demonstrated, the ability to build a mine, to commission it in almost record time, and in their first full quarter of production, which was Q4, they're at guidance or already exceeding it in various respects. So that's at an equivalent point almost better than Wang Yon was when we bought it.
Share price offer comes in from Gold Royalty, share price pops up between 30 and 40 cents Canadian. It's still up there, still hanging around these new highs for you. People looking for a quick win there. Looks like they're not going to get it. Are you concerned that you'll see a bit of an exodus from a certain type of shareholder?
Look, I think for all the reasons outlined, one of the we're confident that all the reasons outlined in our circular, if Elemental continues as an independent company, particularly with our two royalties coming online this year, and with the ability to continue to execute on the plan, I'm confident that shareholders will see value in that, and investors will. And when you look at our shareholder base, and roughly speaking, the top 20 own sort of well in excess of 50% of the company. When you look at our shareholder base, those shareholders have been very supportive, very long term, continue to be. And I think that for us is really key in driving the company forwards. So short answer, we're really confident that as an independent company, we can continue to drive value for shareholders going forwards. Okay,
and we're going to hear about your ability to, you touched upon it earlier, but in terms of access to capital, access to cheaper capital, refinancing out existing structures, is that also on the to-do list in 2022?
Yeah, despite the hostile bid, we're continuing to progress discussions on a couple of fronts, and we've mentioned before both deals and opportunities we're looking at, also credit facility refinancing, and I think as we grow the company, one of the key things that we've always targeted is lowering our cost of capital, building out the portfolio, getting critical mass in terms of revenue and also pipeline, and then with that, as you get greater scale and with a good quality portfolio, you get enhanced liquidity, you get a bigger, broader shareholder base. And I think those are all the things that we were looking to and we still are in 2022 in terms of continuing to build Elemental.
So how do financiers view situations like this? If there's a potential takeover, whoever, whether it be Gold Royalty or other, and the financier views them as a higher risk than you in terms of revenue coming in terms of, and that would affect how they would their comfort levels, and therefore how they would value the risk component there, and therefore the cost of money. Does that affect your ability to actually have conversations, or conversations the way you'd like to have conversations this year?
Well, I think it's fortunate for us that there has been such a clear and I think such a clear and aligned view from our shareholders that they do not intend to accept this offer, and I think that really makes our job easier. And I think that in the situation we're in, being able to come out with that in a very short space of time, and come out with I think such a strong response from the company and from shareholders, I think that's made our job easier in terms of continuing to progress the company and our business objectives to maximize value for shareholders. And I think our view has always been that this company in our portfolio, we have become a more attractive company as we have grown it. And our view is that will continue to be the case as some of our royalties have resource and reserve updates, as some of them continue to hit their targets, as other royalties come on stream. We will not be a less attractive company because of it. the opposite is true. We will actually be a more attractive asset company, and we will have we'll be able to deliver better value for our shareholders. And that has been a view that we have espoused since we started, and long before this bid came to pass.
Okay, and obviously we talked about credit facilities and structured finance that may be available to you, or certainly you're having conversations about. But given the pop in the share price, you can take advantage and raise any equity in the market.
I think that clearly one thing that this hostile bid has done is it has highlighted the value in Elemental, and I think we have spoken to you a number of times in the past and said that, look, these are high quality assets. You rarely see them in a junior royalty company, and it really gives us a platform to build out the company. And I think that we continue to look to ability to do that going forwards, and it's important for Elemental shareholders to see that we're not sitting back and sitting on our hands and not doing anything, but we are doing what we've said we would always do: continue to add to the business, continue to expand the portfolio in a measured, sensible, and value accretive way. And that is what we will do.
Is that a maybe or a yes? I'm trying to work that out.
Going back to the original question, we're always looking at multiple opportunities, and it's very much when we find something that is attractive, bid or otherwise, we will progress it.
Brad, good to see you today. Thanks for the update on the unsolicited bid. Any reasons for not accepting that? Also, thanks for the update on the rest of the portfolio. You got to get on with the business of running the business. So we'll hear from you soon, I suspect.
Much appreciate it, Matt. Thank you very much.